The hot topic these days in real estate is the increase in mortgage rates. Are they working to make housing more affordable or more difficult? On this episode, we have local mortgage broker Christine Buemann here to clear the fog around mortgage rates and affordability. Easy for me to say. So let's get into it. All right, before we get into it, I'm a bit of a nerd, so I like random facts. And so I have a random fact for you today that you may or may not know. But this is my random fact. There are parts of Africa in all 4 hemispheres.
That's really cool.
Hey?
Yeah.
See, I never thought I read that, and I did not think about that before. So for people who education was largely focused on the Western world, it may come as a surprise to find out exactly how huge the continent of Africa is. For instance, it spans all 4 hemispheres and covers nearly 12 million square miles. And here's another interesting fact, and it may be easy. I got this right away, but do you know the only city that straddles 2 continents?
I don't.
No.
So I totally...
I know. Thanks for making us feel bad, Colin.
Well, what geography when growing up was always a favorite of mine because I really enjoyed traveling. And I always nerded out, especially when it came to like medieval Europe and stuff like that. I am a complete nerd. That city is Istanbul, or used to be called Constantinople.
Oh, okay. Yeah, absolutely, 100%.
I know. It straddles both Europe and Asia. Okay.
You know what? I am not someone who embraces geography. I have no sense of direction at all. I couldn't have been a realtor when there wasn't car GPS. That would not have been a thing for me because even with my car GPS, I get nervous when my clients are like, "Oh, I'll just follow you there." I'm like, that's a bad choice. I'll follow you there.
This is a real thing. Me being, I'm good with geography, good with finding my way around. But do you think you could give me a street name and I'd be like, okay, I'll go there. I know every corner of Prince George. I grew up here and I drove before there's GPS. I'm dating myself, I know. But my little 1979 Rabbit that I had when I was a teenager.
Classic.
I know, totally classic. But I still do the same thing. I'm like, okay, I got to show a house there and there. Oh, where are they? Where is that street? Some I recognize, some I don't. And I try to I hide myself. And then I punch it into my GPS and I'll be like, oh, I know where that is. And then I don't need to follow the GPS because I know how to get there.
So my car has this amazing function where I can put in all of the houses that I'm going to and I can arrange the order that they're going to be shown in. And once I hit the first place, it takes me to the next place and so on. I don't have to repunch them in. It's beautiful.
Yeah, my Tesla does that now too.
You had to name drop, didn't you?
What? I just said Tesla. My Tesla's pretty cool. It's basically a computer on 4 wheels.
It absolutely is.
Yeah. And I know you guys love it because I think of it as a spaceship.
It is a spaceship inside.
It's
really cool.
Excellent. All right. Enough nerding out here. We'll introduce our guest today, which is Christine Buemann. Christine and I have done lots of these together and talked lots on social media about real estate and mortgages and stuff like that. And I find her one of the most knowledgeable people and speaks very well and is an avid reader. But Christine has been a mortgage broker since 2010 and has been investing in real estate up here in northern BC since 2005. She's really passionate about mortgages and is often commended for her ability to think outside of the box, whether it pertains to qualifying or overall cost savings, protecting her clients and working for the best interest is always a top priority. I stole that from your website.
Like, that sounds exactly right. Thank you.
No problem. So welcome to the podcast, Christine. We're going to try to make this not boring because mortgages and numbers and stuff like that, you know, it can be really boring unless you are looking to buy or sell. But it is a hot topic. It is a hot topic because of the last 2 years. We are coming off of a crazy, crazy busy market. And all of a sudden, it was like a switch happened in June. And everything slowed down. And literally over the summer. And I've been selling real estate for over 16 years now, and I've never seen it come to such a grinding halt as it did. How did you find it on your side?
Yeah, I think for us, because we're a full service brokerage, meaning we do the servicing for our clients as well, we're finding that our time is still quite preoccupied with conversations. But I think that as far as activity goes, it's definitely slowed down. We're still seeing a lot of people get pre-approved. We haven't experienced the dramatic slowdown that we've seen in some of the bigger centers. Although I would say the last week and a half, 2 weeks, we are definitely seeing a shift. We're seeing a shift in the type of transaction that people are wanting to be engaged in. So people are really wanting that deal. We're seeing a gap in expectation. So I've never experienced more purchases falling apart due to home inspection. We're seeing a lot of, and of course, as a broker, we do a lot of refinances, transfer, things like that. So I find that our time right now is spent most often talking to clients about the emotional side of real estate that we often neglect to be one of the most important things. So doing the servicing, doing refinances for debt consolidation, and doing preparation for where people expect rates to be at the end of 2023. So I also find that with real estate, there's been this tap that's been turned on. And it's just been this sort of easygoing environment for the last few years. And now we're seeing realtors who are leveling up their skills in negotiation. We're seeing really more of an alignment in, okay, well, your furnace is broken. Now you don't have 5 people lined up behind me to purchase this home. So we're going to ask you actually for a price reduction. So yeah, the really interesting trends. The biggest one would be the home inspection issues.
Yeah, I would say I definitely feel that as well. I think that I'm happy, and I know that we've spoken about this. I am happy that now there needs to be some skill involved in a real estate transaction. It isn't just throw as much money as you possibly can towards that house and just hope that you get it. I think I've been very vocal about the fact that I didn't like how the market was going. And I love the fact that now sellers have to put in some effort, the buyers have to put in their effort and go forth. And obviously the realtors and the brokers and everyone needs to put in their effort. And I think that this is how real estate should be.
I completely agree. And I think also as far as the risky behavior in a transaction, what a beautiful gift that our clients have now, that they can, in fact, buy a home. They're not writing 17 offers over list price, getting emotionally engaged in the process, only to be disappointed in this perpetual cycle of disappointment, only to step back from the market. So when people come to me and say, what's the market? You can actually buy a home now.
Yeah.
Experience. And you can rate subject to financing. And you can have 10 days to make sure that you're going through all the motions and that you're safe and you can negotiate. So yes, it's unfortunate that the cost of borrowing has gone up quickly. Will it readjust? Anything like a pendulum will shift back and it'll normalize. I think that there's a lot of conversation happening right now in the media and, I mean, every water cooler probably, because this impacts anyone who needs a place to live. Mm-hmm. Whether it's renters or homeowners, right now what we have is the cost of living in general is going up and also the cost of housing. So it's very relevant. It's very uncertain. However, at the end of the day, it'll all settle once the dust settles. As far as I'm concerned.
So you made a comment about, the pendulum and it swinging, and what you said when it normalizes. What do you think the normalized rate is?
Ooh, so my best guess is going to be 2023, it'll start to shift back down. 2024, it'll trend down. These next few months will be a very big indicator on how the next few years will go. But I would say end of 2024 will probably be 3.79 to 3.99 for a 5-year.
That'd be beautiful. Yeah.
That's not, that's not bad. When Bailey and I bought our first home, I think our mortgage was at 5.8.
Yep.
And we thought we had hit the lottery. We were like, this is awesome. But we have had it so good for so long that when they were raised, everybody went, pump the brakes, and stopped. And that was June. Now, they did that to slow inflation.
Yes.
And
so here's the analogy that I like to use is rates were on sale. They were like 90% off for a long time. And, imagine you've got your favorite store, your favorite item, and you've got all of these at 90% off. People were just buying them thinking, this is amazing. And then all of a sudden that price started to become a little bit entrenched. And then, okay, now it's 50% off. And then 20% off. Now it's full price. Now you're in inflation. So now you're paying slightly higher for that item than you would at a standard price point. Mm-hmm. But at some point, it'll normalize back down to standard. And we just have to be really mindful not to compare the price of that item to the 90% off sale price.
Yes. Yes.
We can have our expectation at 1.2% for mortgage financing. And I think the people who it impacts the most are those who purchased 2019 to recently, because they were able to take advantage of those low rates. And unfortunately, first-time buyers specifically became accustomed to those mortgage payments, and they're going to see the largest shift in their payments and overall cost. Yeah.
And that's the tough part. That's the part to worry about is, after whatever the term is, refinancing, and all of a sudden, it jumps up quite a bit. So, we saw in June, everybody, media, and the media is literally still pumping fear out to everybody about the housing market and whatnot. Here in Prince George, it hasn't really changed. And to be perfectly honest, having worked through, 2008, 2000 to 2010, 2011, it didn't affect us up here that much. I pulled a few numbers on sales numbers. In October of 2019, we had about 80 sales. October 2018, we had about 91 sales. In October of this year, we had 62 sales. So the number of sales did drop, but it didn't drop significantly. 62 sales is still really quite low, but it's understandable. And I think it will come back once everybody gets used to this normal.
I think the difference too, sort of jump in there, Colin, from my experience anyways, from my perspective with my clients, is I feel as though the reduction in sales is less a reduction in buyers available and more a reduction in people who are selling. So a lot of people right now are pulling back from selling. We have a ton of qualified pre-approved clients who are amazing. They're ready to purchase. What I hear every day is there's just nothing to buy. There's just nothing to buy. So whereas we would have had 10 buyers for that home previously, then maybe now there are 3. There's definitely a gap in expectation as far as value goes that we have to just navigate. It's going to be a tricky few months while we find our footing again. It went a little bit over the top there. But in general, there are a lot of people looking to buy right now. And I feel as though there's a perception of a lack in inventory.
Yeah. So, they did this to slow the market down, to stave off inflation. But what is still going on is the supply and demand is off. The supply is low, demand is still high, like you just said. So what happens? We all know what happens when that occurs. Prices go up and it becomes less affordable.
Totally. And
the thing is that like we're talking about mortgage rates, but that's just part of the equation for a lot of buyers. And people are still going to buy and sell because there's always a reason why, right? And we talk about it in our group, find out the why. And all of those people are still out there. And I think that the media tells us what Canada is doing, but that doesn't really tell you what Prince George is doing. And so I think a lot of people are scared because they hear what's in the media, and that's intimidating. But that's not what Prince George is doing.
That's totally right. The media talks about the Canadian real estate market, but the Canadian real estate market that they're referring to, Toronto, Vancouver, Montreal, it is not indicative. There is really no Canadian real estate market. There's a Toronto real estate market. There is a Vancouver real estate market. There is a Prince George real estate market. And when they're pumping fear about this, then, don't listen to it, because it is not the truth. If you want the truth, talk to a local real estate expert.
And even just to add on to that, that's brilliant. And there are sub-markets within, so let's just say, so I own a mortgage brokerage that's based out of Surrey. So I have a very deep and clear understanding of what those markets have shifted to. And that's definitely a different, not a reflection of what we have here. But if you think about, Vancouver market is significantly different than Chilliwack. So the price adjustments are going to really vary per community as well. And I feel as though this has really highlighted the strength of investing in Prince George, because we have proven to be resilient time and time again through the quality of the people who live here, and also just the quality of our economic standards, how we engage with each other. I think it's really shone a light on northern BC.
Yeah, absolutely. We don't have the highs and lows that they have down there. It was, as a real estate professional, it was slower than normal this summer. Still is. But like you said, there's still buyers out there. If people start to sell, then those buyers are going to be there for them. And it's going to continue. And as we move forward over the next couple of years, it'll just keep moving forward, keep moving on. And, hopefully, it increases a little bit at a time. It doesn't go up like the craziness of the last 2 years. So I just wanted to shift our conversation a little bit about younger home buyers here in Prince George. And, Jessica, being 26, she can is in tune with those buyers, and she's helping them find homes. What do you see about affordability around, younger first-time home buyers? Christine.
Oh, sorry. I thought you were I was like, wait.
Yeah.
So for first-time buyers specifically, I feel as though there's still a lot of activity, because they still have the two choices. You can rent or you can own. So yes, the cost of owning is going up, but I feel as though there's a hesitation in those who are looking to sell and buy at the same time, because that's where you have more decisions to make. You're thinking, okay, am I selling at a certain point where now I'm going to be paying off a mortgage that has a 1.39% fixed rate to acquire a mortgage at a 5% rate? So first-time buyers are faced with a very different decision. And either way, the decision is hard. I always say, choose your heart, right? So in this situation, it will be, am I paying rent at a certain amount? I would, now more than ever, I'm seeing people who say, my rent is actually relatively cheap compared to owning a home. I've never had a conversation. It's typically people say, I can pay this amount for rent. So now I want to be purchasing a home. But I think prices are becoming more, I wouldn't say that they're declining, but I'm seeing more homes come up in reasonable price ranges, is what I would say. And we have a beautiful opportunity here in Prince George or Northern BC for first-time buyers who are younger than in other communities to get into a home. We see a lot of gifted down payment. We see a lot of joint applicants, or even a lot of people who are working remote and they're living here in Prince George. So, we do a lot of first-time buyers, and we see a lot of people here short-term. So they come here for their training, they come here for whatever opportunities exist employment-wise, and then they transition away. We see a lot of younger families relocating to Prince George now for the affordability, but they wouldn't be predominantly first-time buyers. Most often they're selling a home in the Lower Mainland, and then they're moving up here, or the island Kelowna.
So being a mortgage broker both down south and here, I have heard, and I don't know if it's true, but I have heard that in Vancouver there's more people who sometimes don't even know each other, and they're going in as a partnership buying a house because as an individual they can't afford it. Do you see that very often here, and do you see it in Vancouver?
So I don't do very many in Vancouver specifically. I own the brokerage, so we've got an amazing team of brokers who do it under there. I wouldn't see it as a massive trend. I've done a few up here for sure. There are other preferred strategies than friends going in, to be honest, because I've been doing this long enough and I've done thousands of mortgages to say that the majority of time when friends buy together, they are not friends in 5 years.
Friends are family. Family.
Right.
Yeah.
So
Go
what
together.
I think is more the trend that's actually really interesting. About 10 years ago, someone approached me and said, this is going to be the trend. Keep an eye out for it. And I was like, that is crazy. It's not going to happen. And now we're seeing it more than ever is parents moving in with their children.
Yeah,
So
absolutely.
we're seeing a lot of properties in Prince George specifically, and because we do a lot of strategy sessions with our clients, we're seeing a lot of people who are building suites. So we're seeing a lot more suite income, and we have a bit more flexibility up here for that. And we're seeing a ton of families amalgamate and purchase together. We're also, unfortunately, we're seeing a ton of separations. So I do wonder how that impacts the market as well, because you have one family in one house, and then now you have two houses that are going to be required once that family reallocates their living, you know what I mean? So we're seeing a ton of that. And I mean, those people, when's the right time to buy? When you need a house.
Yeah, exactly.
You can't market in those situations.
The reason why.
Totally.
So with David Ebby's announcement the other day with the strata rules, and now those being able to be rented, how do you think that's going to affect first-time home buyers?
Yeah, that's gonna be interesting to see how it plays out. I would say that would be less on my mortgage side because it'll impact in that we can do more mortgages in those complexes. It'll be interesting for those who already own in complexes and sort of the value perception or change. In general, here in Prince George, I can't see it making a dramatic difference, to be honest. The Lower Mainland, where we have a lot more strata properties, we do have a lot more strata complexes being built here, but it's not something I personally don't see a ton of age restriction limitations or.
Well, there's a fair amount of rental limitations. So, like 5 units can be rented, for example. And if you have a unit that's rented and your tenants move out, you have to reapply to be able to rent it. And so I often tell my investor clients, I wouldn't do it because it's risky. But now, without that risk, what I'm concerned about is the strata complexes is where first-time homebuyers, it's kind of their easy in. And if those prices come up, because now investors are interested in them,
yeah, it'll be. I think time will tell. I think it's such a new announcement that we'll have to see how it plays out. I think we'll also have to see investor appetite. Because I share that same concern with you that in general in BC, I do think that investment is going to be the larger trend that we start to see as prices readjust in the Lower Mainland, which is great. I'm a long-time property investor myself. Anybody's got a deal on a property, I'm always looking. However, that doesn't help the supply issue.
yes.
Right. So I acknowledge that I could be contributing a little bit to the problem. I do think that people still need a home to live in, and those who are renting likely are qualifying for the mortgage. So there's a balance there. But if we have a surge of people looking to invest, then, and ironically, I was reading a study, and first-time buyers are right now statistically the highest risk for not being able to pay their mortgage. Investors have actually come out as the lowest risk. So
I believe that.
Enough capital and enough cash flow, even just within their income structures for whatever they're earning for personal income. So
having
default management, that could be something to consider.
Yeah, owning properties ourselves, multiple properties, I can totally understand that. And it gets a little scary once we start talking about restricting investing. I was sure that was going to rear its ugly head as it did for the last 2 years. And it would really, really, cut into our freedoms a lot if they started, legislation about how many, or if you can invest or buy homes that you actually don't live in and rent out, which could be a real problem, and I would feel very strongly about that.
I agree, and I think it's a challenge when the government has their hand in our pockets a little bit too much, but also when they're controlling a lot, even when you think of rent increases, right? Obviously, I believe everyone needs affordable housing. However, it's a challenge when your mortgage payment, if you're in an adjustable rate or you're up for renewal, your mortgage payment could be in the Lower Mainland. You could have an extra $2,500 a month in your mortgage. So yes, I do believe that it needs to be affordable for all renters as well, but I don't also believe that a landlord should be handcuffed to how much they can charge to rent in those situations if their cost of overall monthly cash flow is going up considerably.
Mm-hmm. Yeah, absolutely. And that brings me to another point. Global released an article all about variable rate mortgages, and that on 50% of variable rate mortgage holders with fixed payments had hit their trigger rate in Canada. Can you tell us a little bit, one, what is a trigger rate, and what is this going to do to variable rates?
Great question. And it's not as scary as it sounds, but it's something to definitely be mindful of. So when it comes to fluctuating rate products, there are three main categories. First one, secured line of credit. We'll leave that one off the table. Then we have a variable rate and an adjustable rate. People over the years have been using them interchangeably and incorrectly, to be honest. Even CMHC has them labeled incorrectly, but a true variable rate mortgage has a fixed payment. And then that would be comparing to an adjustable rate. An adjustable rate, as rates move, your payment will move at the same time. So a fixed payment variable, which is how I prefer to label it so that it can have a bit of a clear understanding.
Sounds way better.
Yeah, it's way better. A fixed payment variable, let's just say you acquired the mortgage, your payment is that, your rate is 1.5%. So at the time it was prime minus a significant discount that was available, let's call it 2020, right? As your rate has gone up, your payments actually remained the same. So in an environment where rates went down, it was great because more of your payment was allocated towards the principal reduction than to interest. So you were actually able to utilize that time frame to reduce your balance. Everything is great. We have yet to experience in my career here a rate increase as fast and furious as what we had recently. Mm-hmm. Now, this time last year, shortly before this time last year, the government was on record saying mortgage rates are going to be low for the foreseeable future. So that was the expectation that a lot of us were sort of using to navigate our guidance and to make our own decisions. I'm in adjustable rate mortgages on all my mortgages. So as we moved through that, people were getting into these low rates. A lot of them were setting their payments higher, which is what you should be doing in those situations, going in understanding that it wasn't going to last forever. However, there's a lot of confusion when people just walk into their bank and they're looking at the payment and they may not have had the explanation. You've got a bank employee who's sitting there from 9 till 2, and no disrespect to that career, but oftentimes they may not have a depth of understanding to be able to explain to you the difference in their product. They don't know what the other bank is offering and how what they're offering is different. So unfortunately, a lot of people were in these fixed payment variables, not necessarily understanding that the rate itself was going to change. So they're looking, well, my payment's staying the same. And so what happens is if you don't, so we'll go back to say this person who acquired the mortgage in 2020, we have this low rate, now their rate is going up. If they haven't proactively been increasing their payment, the payment itself actually hasn't been increasing, which means that at a certain point, not enough of your mortgage payment will be used towards principal reduction, towards the interest. So your payment isn't even covering the interest. So now every time you're not making that minimum payment due, you're actually stretching out the amortization. So we were seeing some like 50 to 70 year amortization within a very short period of time.
Holy smokes.
Every bank, and this is a new experience for lenders as well. People are saying, what are they going to do? The banks are like, wait, hold on, we're trying to figure out something. The insurers are trying to come up with solutions, and every lender is treating it differently. But the majority of them are saying, okay, you can convert to a fixed, and this is what your new payment will be. Here's your catch-up payment. Or the majority of them are just saying, we're going to add an additional $1,000 a month or whatever it is to your payment so that you can get caught up at renewal. Then some are saying, okay, well, now you need to be caught up to your amortization at the renewal time. So statistically in Canada, the majority of mortgages who are in fixed payment variables will hit their trigger rate by the end of the year. And the trigger rate specifically is when not enough of your payment is covering interest. So that's when an action item needs to happen. And some will say, give us a lump sum. Some will look at the current property value in comparison to your loan balance. So there's different registrations on title, collateral charge, non-collateral charge. It's a very complex situation, and I would say anyone who's experiencing discomfort in that situation just needs to reach out to their mortgage broker or to their bank, whoever, to get a little bit of guidance on how to move through that really strategically.
And this right here is exactly why we advise our clients to always talk to a mortgage professional, not to, a bank teller or an accounts person at your bank. Talk to somebody who just does mortgages.
Mm-hmm.
Excellent.
So what happens if, they're approached and say, you have to pay this amount of money to kind of play catch up, and they don't have that money? What are their options?
That is very much case by case. So sometimes right now the lenders are working on some sort of backup plans. I'm not confident in those, to be honest, just like the deferrals. They said, don't worry, when COVID hit, don't worry, you can defer your mortgage. And people are utilizing that strategy to actually just have more cash flow. And now suddenly they've got these deferrals reporting on their credit report, and they're having a hard time getting a mortgage in the future because of that. So what feels like relief in the moment may not be a strategic long-term plan. And I would say first thing that they can do is just review their overall budget and make sure that they might be able to, to restructure things a little bit in their own personal finances and say, well, what are our thoughts long term? Is this a year? Is it an 18-month plan? We're doing a lot of car loan refinances where people are saying, okay, well, maybe I can't do anything about the mortgage specifically right now, but I have a really high, 19-20% car loan. We're seeing a lot of people refinance and consolidate debt, stretch out the amortization, and say our priority has been to pay off our mortgage, because here in the North, we have a lot of people who are focused on paying down their mortgage. The Lower Mainland, there's a perpetual refinance cycle, and I think it's because of the high mortgage values. People have a hard time connecting with ever having that paid off. Here, people are really actually determined to pay their mortgage off. So we have a lot of people with a lot of equity. And in those situations, we're doing, transfers in and doing a cash back. We have specific programs designed for those who want to come in, transfer in. They might have to do a shorter amortization, but they can get a fixed payment and maybe do a cash back structure. So I wouldn't say it's a one size fits all. It's a tailored solution to fit what your family's long-term plans are and give a little bit of relief short-term.
Excellent. Before we wind this up, if I am a person seeking a mortgage, what is your top recommendations for me to do before I come and see you?
So I would say, again, really depending on your situation, getting your documents together, that's probably the biggest delay. Lenders will all require supporting documents. So letter from your employer to confirm your income, tax returns, if you don't have them available, you're going to need them. So even setting up CRA My Account, that's probably the number one most useful thing that people can do. Set that up for your future self as well.
CRA My Account. Okay.
Yes. Yeah. So you can go, if you just Google CRA My Account, you can actually create an account. You can print any previous documents at any time. Any child tax benefits or anything like that. Speak to a mortgage professional to get a framework of what your maximum mortgage amount is going to be. Right now, the stress test being 2% over the actual rate that you're paying, we're seeing stress tests up in the 7%. So there's a massive disconnect I'm finding in what people are wanting to purchase for a purchase price and the payment amount, as well as the qualifying amount. So if you want to get into it and do a little bit of legwork before you start the whole credit check and process, I would say, play with some calculators. I have a bunch on my website at ChristineBuemann.ca if anybody wants to play around with those.
That is ChristineBuemann.ca.
Yeah,
I'll actually put that link in our show notes to make it super, super easy for everybody.
Perfect. And we've got a bunch that'll do like payment amount and qualifying amount, but play with those first and make sure that we're seeing people that'll want a $500,000 purchase, but they only qualify for $170,000. So like massive gaps in expectation, which I think are something to just get ahead of, because then you want to talk about, well, this is what the payment is going to be in that price point. Down payment, you need a minimum 5%. We're seeing a lot of people right now who don't have the full down payment saved. And so the concern for lenders is what they call fallback, making sure that if inflation continues to, does an upward trend for a while, then they want to make sure that you can pay your bills.
Yep. And once they come and see you, they can give our team a shout. OneOakGroup.ca is the best way to contact us. Our email is info@OneOakGroup.ca. And we can get out there and we can show you some homes, do an exploratory tour, show you some homes within your price range and help you make decisions on what works best for you and your family. So, Christine, thank you so very much. You really, really make things simple and a lot less scary.
That's my hope anyway. And I'll just give one plug to you guys as well. I absolutely love working with your team. And one thing that our clients have expressed as just a really big advantage of dealing with you guys as realtors is your ability to help your ability to align with their vision and then help reverse engineer a plan rather than just being an order taker and saying, you're getting this house in this area, saying, okay, well, how can we figure out what feels best for you as far as this new home that you're purchasing? And then maybe get a little creative with a solution that's 95% there, but at least gets you into a home rather than searching for that 100% for 3 years,
Yep. Thank you so much.
Absolutely.
We try to deliver the best customer service in our marketplace. So
We
thank
like
you
our
very
clients.
much. we
Clients
love
like
our
you
clients.
too, so that's helpful.
All right. Thanks again, and we'll leave you at that. And everybody, if you're looking for a mortgage, contact Christine.
Thanks, guys.
Take care.
Bye, guys.
Have a great day.